Equity Mates, from our mates at Spaceship. Investing made easy. Equity Mates, from our mates at Spaceship. Investing made easy.
Welcome to another episode of Equity Mates, first for the week. We are excited to be back, as always, for a full week here at AusBiz. My name is Bryce, and as always, I'm joined by my equity buddy, Ren. How are you going?
I'm very good, Bryce. Good start to the week.
Bombers won.
You just couldn't wait to get that out of your mouth, could you?
Bombers bloody won, yeah.
Bryce has been walking around the office all day telling everyone to call him the package. Jake Stringer, his favourite player,
yes.
For those non-AFL fans. But look, we're not here to talk AFL. We're here. You could. We're here to talk ASX.
Yes.
And you were very excited on Friday, I must say. What's one of the most excited I've ever seen you this month.
Wow.
And that's because Aussie Tech had a day on Friday.
It had a field day.
It did.
Yeah, so this episode we are going to have a discussion around, is Aussie Tech back? We know that it's certainly taken a beating over the last few months, and it had its best day on Friday. So,
and look, before you even go any further, I have to take issue with the episode title. Aussie Tech was never gone. It just
yeah, it was.
It's just had
Afterpay for many people in the Equity Mates community would have been absolutely burning some holes in pockets.
It's gone up a lot. It's gone down a lot. Afterpay has been a roller coaster of a stock.
And that's the type of analysis you can expect here at Equity Mates. It's gone up a lot. It's gone down a lot.
But my point is that the company itself wasn't anywhere, the company is just continuing to do its thing, invest in growing its business, figure out the US business, see if it can crack other markets.
Sure.
It's not like it was gone and now it's back.
Sure.
It's just investor sentiment.
Well, let's leave the philosophy and the Equity Mates till the end. But let's start at the start. Ren, you are right. Aussie Tech had its best day on Friday, 18th of June. I think it was up about 3.5%. The ASX 200 IT Index jumping 3.5%. Some big movers. Obviously, Afterpay, everyone happy to see in the Equity Mates community, I think was up about 6%. So look, as you said, Ren, it was a happy day for those who are overweight Aussie Tech.
Yes, a happy day and a happy month for Aussie Tech investors. For June, the ASX IT Index is up 13%. It was up 13% on Friday, the most of the 11 share market sectors. So after a slow start to the year, it's been a good month.
Yeah.
But let's put it in context. If we zoom out a little bit, year to date, it's been a tough start to the year for Aussie Tech. So ASX 200 up 11.7% for the year until Friday. Not bad.
Yeah, you take that. That's average.
It's better than average.
Yes, long-term average.
In half a year.
True.
Yeah,
half a year, yeah.
But, so the ASX 200 up 11.7% for the year. The ASX IT Index down 4.3%.
So seriously underperforming the market. No surprises. We did have some bold predictions at the start of the year, though, and I think I did anyway. I should have had a look before this episode, and I think I tried to rate the sectors best performing.
Jesus, that's the kind of quality content you can expect here.
And I'm happy to say I didn't have tech in my top 3.
What were your top 3?
Healthcare,
Okay.
industrials like airports and stuff, and
Wouldn't airports be infrastructure?
no, I was going very high level. And I can't remember what the other one was. We'll bring this next week.
Jesus, it's been a loose episode. So look, let's talk about why it's happening.
Yep.
I guess we'll ask the question, what happened to all this concern about inflation and bond yields and interest rates, which was said to be the reason for the tech sell-off that we really saw in mid-February this year. But before we do, let's establish a little bit of terminology for those new to some of the less discussed ASX indexes.
Yep.
Most people have heard of the ASX 200,
Yep.
the All Ords.
Yep.
Not as many people will have heard of the ASX 200 IT Index.
No.
And then the ASX All Technology Index. And spoiler alert, they are different indexes.
You would think so.
Yeah. So ASX 200 IT Index, as the name suggests, from the ASX 200, the top 200 stocks, it pulls out the IT specific stocks, gives it 15. No prize for guessing the biggest stock in that index.
APT, Afterpay.
Afterpay.
Yeah.
So I tried to group them. So it's got the wax stocks.
Yep.
What are they?
WiseTech, Altium, Appen, Xero, and
You're missing an A.
an A. Appen, Altium, and I can't remember the other one.
you just said
Afterpay.
It's got a couple of share market related stocks. Computershare, Link Administration Holdings, Iris.
Okay.
Couple of DC players, NextDC and Megaport.
Yep.
And then I stopped worrying about grouping them and just put other.
Nice.
Codan, EML Payments, Nearmap, Nuix, controversial stock, and Technology One. So 15 very heavily IT related stocks. The thing that jumps out to me in that list is that there's some ASX 200 technology companies, you would say, that aren't in there.
Such as?
Real estate or REA Group, Seek, car sales.
Yeah, that's an interesting one. Do they classify themselves as IT though?
Well, the ASX obviously don't.
No, they probably be more. Well, yeah, because I feel like a lot of those are software companies, right? Well, I guess Domain. Yeah, they're not software companies.
No. But so that's the first index, 15 stocks, very heavily IT related.
And a relatively new index as well from memory.
Yes.
Yeah, like the last couple of years.
Yeah. And then we have the ASX All Technology Index, and this is a bit bigger, so 75 stocks, and this is more what I thought when I think about it. Technology focused index. So top 10 stocks: Afterpay, REA Group, Xero, Seek, WiseTech, Computershare, NextDC, Pro Medicus, Car Sales, Altium.
So that's the one to follow if you want mass exposure to Aussie tech.
Yes.
Yeah.
Now, for those investors, and I know there's plenty in the Equity Mates community that invest in that ATech ETF, the Beta Shares one.
Yeah.
It follows the All Technology Index. So it has exposure to the 75 stocks.
Yeah, right.
Yeah.
I thought it was more concentrated. Okay, so that is a bit of Back to Basics 101, or the landscape of the Aussie Tech Index. But now the question is, if you're invested in ATech or some of the more specific Aussie stocks, you certainly would have noticed that you were underperforming the market if you were in any of the ASX 200 index, for example. And the big question is, why has tech been underperforming?
Yes.
So,
well, if we go back to February, and we don't need to rehash this because if you follow financial media, you saw it over and over again. But investors around the world sold off growth stocks on fears of inflation that led to a sell-off in bonds because investors thought bond yields would rise, or that sent bond yields rising, I should say. Because yields rose, stocks that traded on higher valuations got re-rated, I guess.
Yep.
Investors rethought the present value of future cash flows.
Yep.
as the discount rate went up, and high growth tech stocks fell off.
Yeah, and there's no doubt that a lot of these companies here would be in that growth basket, with investors expecting some decent returns in the future, which is why they've been sold off. But it was a pretty extensive sell-off.
Yeah, so from mid-February to early March, the All Technology Index, the ASX one, fell off about 20%.
Yeah.
Yeah.
So if you were also leveraged in that, it would have been quite painful.
Yes. But look, if you go from early March to now, it's back up, and the All Technology Index is now slightly up for the year. Intraday today, when I was looking at it, it was up 0.3% for the year. So it has recovered from that sell-off. If you zoom out, it's up 35% over the last 12 months. So
yeah, we'll zoom out over 3 years.
I don't think it's existed for 3 years.
Well, zoom out from start. But yeah, if you think about where it was last March, it's up.
So this begs the question that, on one hand, we had inflation concerns in February, high growth tech stocks fell off. We're now in June, and it feels like the inflation conversation is pretty constant. You know, we had the lumber conversation, but that's fell off a bit. Commodity prices are rocketing ahead. We're hearing about bottlenecks in major shipping ports. The inflation conversation is front and center, and yet tech stocks have recovered.
Yeah, so this is an interesting one. When we were speaking with Roger Montgomery, which you may remember we did a 4-part series with him in mid-May, he was pretty confident that this inflation talk was to be short-lived. It was going to have no major impact should have no major impact on the market over the medium term. And he actually was saying that now might be a good time to think about getting back in, because everyone had overstated the sell-off in tech stocks. Great timing from him.
Great timing.
Because that is exactly what's happened.
That's the kind of quality analysis you can get at Equity Mates.
Yes. But
Not from us, we should be clear.
But the thing is, the inflation concerns haven't really subsided as such. And in fact, we're now seeing some of the Federal Reserve board members over in the States actually come out to say that they're going to be, they might be increasing rates sooner rather than later, given the impact that inflation and also the stimulus is having on the economy and the speed at which they're growing. Yeah,
well, let's talk about some of that central bank action. So Jerome Powell, the chairman of the Federal Reserve over in the US, said last Wednesday that they would begin discussing how they're going to pare back the record amounts of monetary stimulus. Just hours later, Philip Lowe, who heads up our central bank over here in Australia, the Reserve Bank of Australia, changed his language around how interest rates, which caused some economists to think interest rate rises in Australia would be happening sooner than previously forecast. So paring back monetary stimulus in the US, in bringing forward interest rates rises in Australia. And then you found someone from the St. Louis Fed who said something similar?
Yeah, so a guy called James Bullard, who has essentially come out to say that he's predicting that interest rate rises will most likely be coming toward, not most likely, but if they were to come towards the end of 2022, and that's just because of he said it in, I guess you would say, a positive light. He thinks that the economy is growing faster than predicted, and eventually that's going to have to lead to some interest rate rises. Of course, that scared the US market on Friday, and hence here we are, big full circle. That's why a lot of the markets here in Australia at the moment, I think we finished down 1.8% or thereabouts on the ASX today, reacting to a pretty shaky sell-off over in the US.
Yeah, so increased chance of interest rate rises sooner rather than later.
Yep.
Increased chance of monetary stimulus being pulled from the markets, and yet tech is having a good month.
And here comes tech. Yeah, tech is back.
And look, I don't actually have an answer.
This it just goes to show you. Trying to time the market in these sorts of things and play the inflation game and play the economy reopening trade, and if you're not in the day to day of all this stuff, it really just goes to show how tricky it can be, and just to really stick it out for the long term. I think, we have 3 examples of 3 different economists here who all are predicting different things when it comes to the interest rate rise. We have Federal Reserve who are saying, different sorts of commentary one month to the other, and making predictions on the market is, as a beginner investor, is just a really silly thing to try and do.
Yeah, well, plenty of experts get it wrong all the time.
Yeah.
They just keep making forecasts.
They do.
But look, I think what you touched on there is how we want to leave this episode, which is all of this talk about, Afterpay reacting, falling because of inflation concerns in February, or tech doing well this month and what's driving it and what does it mean. If you zoom out and you think about like what you're investing in, at the end of the day, a lot of these companies are getting it done regardless of interest rates or central bank policy settings. REA Group, Seek, car sales in that All Technology Index have been getting it done for years, decades. Some of these new companies, the wax stocks, the Afterpays and Zips, they're taking on the world, and whether you invest in them or not is whether you believe in like the company, not about
short-lived inflation concerns.
Yeah. So I think for me that's the biggest takeaway. We live in a day-to-day news cycle. We live in a day-to-day content game here at Equity Mates. You got to front up and talk about something every day. But these companies are long-term businesses.
Yeah.
The market changes quickly, but companies change slowly.
Yeah, well, I think Afterpay even has come out recently. They're moving into more than just buy now, pay later, or thinking about moving in, which again has absolutely no impact on inflation or whatever. So yeah, moral of the story: zoom out.
Zoom out. And that's where we're going to leave it today, I think, unless you got anything else to say.
No, that's all good.
Join us this week. We're going to be talking everything markets. We've got a special edition Watchlist Wednesday this Wednesday. And we're going to be talking about some ethical ETFs because we know ESG investing is a big concern in the Equity Mates community.
Yeah.
So we'll be touching on that. But yeah, join us same time, same place tomorrow and the rest of the week.
See you then.
Equity Mates, from our mates at Spaceship. Investing made easy.